We're joined by the head of a company that's transforming the way we work. That is Slack. The digital communications platform just saw quarterly revenue topping $200 million for the very first time, but its revenue growth wasn't as fast as many had hoped, and the stock is coming under some pressure this morning. Joining us right now is Slack CEO Stewart Butterfield. Good morning to you, Stewart. Walk us through this last quarter, but really try to help us understand what you're seeing in this environment at this point.
We're seeing everything. So first of all, this is a phenomenal quarter for us. I think the most important thing to pay attention to is the number of new customers coming in. So first of all, new organizations using Slack, 90,000 more people started in Q1 than in all of last year. We also had 12,000 net new customers for the quarter compared to 5,000 the previous quarter and the 5,000 the one before that. So about 2.5 times as many. We'll realize the benefits of that over the next year and probably the year following. So there's a very strong tailwind. What we don't know right now is how strong the headwind is, because when our customers feel pain, when there is layoffs, when there's bankruptcies, of course, when there's a hiring freeze, that has an effect on our top line. So we're going to have some pretty strong tailwinds. We're going to have some pretty strong headwinds and be buffeted a little bit in the second half. However, we're not on a one-way path here to the dark ages. As the recovery begins, when our customers are feeling a little bit better, we'll also feel a little bit better on that side. But really strong signals for the year ahead.
Right. How much do you think that this has accelerated your growth? But do you believe that growth has been either front-loaded or pulled forward in a way?
Yeah, I think it has been pulled forward, but the degree of awareness in the market, the degree of receptivity, the speed with which customers are making decisions means that that's not to the detriment of forward quarters. I think it's just everyone has been accelerated down this path of inevitability by 6 months, by 18 months, by 3 years, by 5 years. And that's fantastic, not just for us, but I think for the broader software industry. A lot of the inertia and resistance that has prevented digital transformation projects or the adoption of new technologies, that's kind of broken through. And the long-term impact of this change on the way that we work, I think, is generational, in the same way that email was, in the same way that the first wave of IT was.
What do you think the path to profitability is at this point? And how's that changed?
No, it hasn't changed at all. We guided to cash flow break even at the high end for this year. That's looking like a pretty low bar. Obviously, there's a lot to unpack. One of the things we wanted was some flexibility around helping customers who are in some distress here. And obviously, we have customers in every industry, 120,000 customers around the world. Every geography, every industry, every size, and some of them are really hurting. So allowing them to rework payment terms from annual to quarterly or even to monthly, giving some concessions there was the reason we withdrew guidance for billings for the year. We did guide up on revenue, but we really want to be able to have the flexibility to earn that goodwill and to help our customers out in this period. I think we'll see how the short term is. And there is obviously a great degree of uncertainty there, but long run, this is a fantastic set of changes for us.